For small businesses, payroll can seem daunting, but it's doable. Due to tax obligations and employment law compliance, employers cannot simply hand out cash or write checks on payday. So running payroll becomes an ongoing process you must manage carefully from the moment your first employee is hired. In this episode of HR Party of One, we'll cover how to run payroll, including how to set it up from the beginning and what your options are. By the end, you'll have a better understanding on how to pay your people consistently, compliantly, and correctly. We'll discuss 3 payroll options, how to set up payroll in 3 steps, and how to run payroll in 5 steps. Before we get started, I'm going to clarify that this information is for educational purposes only and does not constitute legal advice. Now, let's get going. 3 payroll options. Before we discuss how to set up and run payroll, I want to mention that you don't have to go it alone. All of your payroll processing options fall into 3 basic strategies: do it yourself, hire an accountant, or use a payroll service provider. Here are the pros and cons of each. DIY pros and cons. Many small business owners choose to run payroll themselves. It can actually be simpler for new employers with a small workforce, and is obviously the most affordable option. It's also a great way to stay on top of your organization's finances in the early stages of growth. However, the DIY option comes with a higher risk of error and takes considerably more time. Using spreadsheet software like Excel or Google Sheets can make the process more efficient than manually filling out and calculating payroll information. But doing it yourself still requires gathering all the inputs and making sure your calculations are correct. DIY becomes less viable as your business grows in personnel and operations. Accountant pros and cons. Whether outsourced or in-house, hiring an accountant is the most reliable way to run payroll. A dedicated professional can take a hands-on approach to managing your payroll, ensuring accuracy and compliance. They can even serve as a valuable payroll consultant. Hiring an accountant is also the most expensive option, even if you outsource accounting services. If you hire an in-house accountant, you should consider the cost of recruiting, onboarding, and training as well. They may well be worth the cost, though considering the convenience and the confidence of handing it off to a professional. Service provider pros and cons. Using a payroll service provider is more reliable and convenient than doing it yourself, and more affordable than hiring an accountant, especially when integrated with an all-in-one Human Resources Information System, or HRIS, like Burning Portal. An HRIS can distribute and collect the necessary tax and benefit forms, track time and attendance, and post tax reporting documentation. Software also automates running payroll, streamlining the process, and eliminating most errors, which can make it easy as pushing a button each pay period. A payroll service provider may not be as accurate and up-to-date as a hands-on accounting professional. And of course, it costs more than running payroll yourself. Adopting new payroll software may require extensive training and add to the responsibilities of your current staff. That's a lot for a small business owner to consider. While there are advantages and disadvantages to all 3 options, setting up your payroll looks much the same in each scenario. That's what we'll cover next. How to set up payroll in 3 steps. Regardless of which payroll option you choose, you'll need to follow these 3 steps first. First, register for an EIN. Just as the IRS uses Social Security numbers to identify individual taxpayers, organizations must have an Employer Identification Number, or EIN, to file their taxes. The application is free and easily accessible. I'll link it in the description. Depending on your location, you may also be required to register for a separate state or local ID number. Then, collect employee tax information. You'll need to distribute a copy of Form W-4 to each employee and collect their completed forms before you start paying them. Employees fill out Form W-4 to determine their filing status, number of dependents, and other adjustments. Employers use the form to calculate how much tax to withhold from employee paychecks. You can use an HRIS like Burning Portal to easily distribute and collect W-4s and even remind employees who still need to complete and return the form. You can download a fillable PDF copy of Form W-4 updated for 2022 from the IRS website. I'll link it in the description, along with a detailed guide to filling out the form for you to share with your new hires. And finally, determine payroll schedule. There are generally 4 options for choosing a pay schedule: monthly, semi-monthly, bi-weekly, and weekly. Most states have laws regulating pay periods, but it's likely you have more discretion in determining your pay schedule than you realize. Keep in mind that the Fair Labor and Standards Act, or FLSA, requires overtime to be calculated weekly. It's also important to consider that most insurance premiums are paid monthly. For these reasons, I would recommend a bi-weekly pay schedule for most organizations. We explained in depth why bi-weekly is the best in an earlier episode of HR Party 1. I'll link it in the description. There are a few other issues to take into consideration when setting up your payroll. For example, workers' compensation insurance is required in every state but Texas, and you'll need the information before running payroll. You'll also need to consider what benefits you'll offer in order to plan for premium deductions. Finally, many small businesses find it easier to manage payroll through a bank account separate from their general business account, so you'll need to have one of those set up as well. As I mentioned, the steps for setting up your payroll are generally the same for everyone, whether you choose to do it yourself, hire an accountant, or use a payroll service provider. But your experience of running payroll will vary depending on which option you choose. How to run payroll in 5 steps. There are basically 5 steps to running payroll once you have it set up, no matter who you choose to run it or how. Still, many of these steps can be outsourced to an accountant or automated through a payroll service provider. In other words, unless you run payroll yourself, it's easy to take some of these steps for granted. So to make sure I explain the topic as thoroughly as possible, I'll cover how to run payroll in 5 steps, as if you were taking the DIY approach. Step 1. Calculate hours and gross pay. The FLSA divides workers into 2 categories based on income and job duties: exempt and non-exempt. Exempt workers are salaried, and generally you can calculate their gross pay by dividing their yearly salary by the number of pay periods in the year. Non-exempt workers are hourly, and you can calculate their gross pay by multiplying the number of hours they've worked in the pay period by their hourly rate. Don't forget to include any overtime pay at 1.5 times each worker's hourly rate. For more information on how to calculate overtime pay, check out an episode of HR FAQ on the topic. For an even deeper dive into the difference between exempt and non-exempt employees, you may be interested in an earlier episode of HR Party 1. I'll link to both of them in the description. You can track workers' hours through punch clocks, paper timesheets, or a spreadsheet, but an HRIS-like Learning Portal can make time and attendance tracking much more accurate and convenient. It can even factor in paid and unpaid time off. You'll also need to calculate stipends, bonuses, and tips for gross pay. Step 2, deduct benefits and withhold taxes. This is where the real challenge of running payroll comes into play. While the terms are often used interchangeably, deductions and withholdings are not the same thing. Taxes are withheld and benefits are deducted. More specifically, you should first subtract the total amount of health plan and life insurance premiums, HSA and 401k contributions, and other pre-tax deductions. Then, calculate how much federal income tax, Social Security tax, and Medicare tax to withhold from each employee's paycheck based on how they completed their W-4. State and local income taxes may also apply. To be clear, these taxes only apply to the amount of gross pay minus pre-tax deductions. The IRS website has a tax withholding estimator that can help you with these calculations. Finally, subtract the total amount of all post-tax deductions, such as Roth IRA contributions, disability insurance premiums, and union dues. Court-ordered wage garnishments for child support, outstanding tax obligations, and debt repayments are also subtracted after taxes. An accountant or payroll service provider can significantly reduce errors and hassle for this crucial step. Step 3, pay employees. Once you've deducted benefits and withheld taxes from gross pay, you're left with an employee's net pay, also known as take-home money. While smaller businesses may prefer to hand out cash or cut paper checks, most find direct deposit more convenient and cost-effective as their organization grows and offer employees an option. Either way, most states require employers to provide employees with documentation, called a pay stub, detailing how their net pay was calculated, including hours, pay rate, deductions, and withholdings. Step 4, pay and file taxes. Of course, you still have to pay all those taxes you withheld from workers' paychecks. Employers must deposit payroll taxes on a monthly or semi-weekly basis. I'll link to the IRS website in the description to help you determine which deposit schedule your business is required to follow. In addition to payroll tax deposits, employers use Form 941 to pay for their share of federal taxes and to report the amount of taxes they withheld from workers' wages. Form 941 must be filed on a quarterly basis. You can download a fillable PDF copy of Form 941 from the IRS website. I'll link to it in the description along with a guide to filling out the form. You are also required to pay unemployment taxes, which may not be withheld from the employee's paychecks. To comply with the Federal Unemployment Tax Act, or FUTA, employers must file Form 940 annually. You can also download a fillable PDF copy of Form 940 from the IRS website. I'll link to it in the description along with a guide to filling out the form. Finally, employers must prepare, furnish, and file Form W-2 for each employee each year. Employees need the W-2 wage and tax statement in order to file their own individual tax returns. Again, you can also download a fillable PDF copy of Form W-4 from the IRS website, which I'll link in the description along with a guide on how to fill it out. As with calculating withholding taxes, an accountant or payroll service provider can significantly reduce errors and hassle for this crucial step. Non-compliance can be costly. And finally, step 5, maintain and retain records. Federal law requires employers to maintain accurate and organized payroll records. For tax purposes, you must retain records for at least 4 years. According to the IRS, these records should contain the following information: your employer identification number, amounts and dates of all wage annuity and pension payments, amounts of tips reported, the fair market value of in-kind wages pay, names, addresses, social security numbers, and occupations of employees and recipients. Any employee copies of Form W-2 that were returned to you as undeliverable. Dates of employment. Periods for which employees and recipients were paid while absent due to sickness or injury, and the amount and weekly rate of payments you or third-party payers made to them. Copies of employees and recipients' income tax withholding certificates such as Forms W-4, W-4P, W-4S, and W-4D. Dates and amounts of tax deposits you made. Copies of returns filed. Records of allocated tips and records of friendly benefits provided, including substantiation. The Department of Labor also requires employers to keep wage records such as time cards, wage rate tables, job evaluations, collective bargaining agreements, work schedules, and records of wage changes for 2 years. A robust, all-in-one HRIS like Bernie portal can help you better maintain and retain payroll records to comply with federal and state law. Even if you'd rather focus on more strategic objectives, payroll is one of the most important functions of your business. After all, you need to pay your people well to help you achieve those objectives, and you need to pay them correctly to protect your bottom line. As always, remember that your role is as strategic as you make it.
All right. So I wrote down all the different main points that she she got to in that video. The three different options for preparation of payroll. When I was practicing, I was a payroll service provider. I was an accountant, but I was a payroll service provider as an accountant. So we had a payroll service company within our CPA firm that provided payroll, the payroll function for businesses. Accountant, what she's referring to there is like an in-house accountant. So, and to mention that that's the most expensive option, because you're paying a full-time individual to run that payroll, and it's going to be somebody who's skilled as well. DIY, I always tried to steer people away from DIY. Clients would come in, they'd start a business, they need to set up payroll, they're going to hire employees. They don't know what all of the forms are that they need, the schedule and the deadlines for all of those forms. They don't know what the requirements are. That was always a big part of my job, was steering them away from that. Obviously, you know, sales is a part of it as well, but too many people get themselves into trouble. You know, you really don't need a plumber also doing payroll. That's, you know, you leave it to the individuals who know what they're doing there. So the three different ways, three different choices for preparation of who can prepare payroll. 3 steps to set up, and we're going to talk about these also in more detail when we talk about insourcing or outsourcing payroll. Register for an EIN, we're going to go through this in chapter 2, how to register for that employer identification number. She mentioned that it's like a social security number for a business. So each business has their own number that is attached to every report that they send in to the IRS, every tax form that they fill out. Everything has that EIN on it, just like you have your social security number and you put it on you use that to identify you to the IRS and the different agencies. Employers have the same thing, called an employer identification number. Collecting employee tax information, which would include the W-4 forms, those new hire forms that employees fill out, and then determining the payroll schedule as well. We're also going to go through this in chapter 2 in more detail, what the different options are for determining what that payroll schedule is. Are you going to pay weekly? Are you going to pay every 2 weeks? Are you going to pay twice a month? Are you going to pay monthly? Different industries will have different schedules. There is a lot of leeway with what the employer can choose. And then she went through 5 steps to prepare payroll. I added step number 6 because this pertains to our class here. Calculating the hours and gross pay. That's what we're going to do in chapter 2. We're going to go through a lot of details about how we calculate that gross amount of pay. Second step, deducting benefits and withholding taxes. That's mostly going to be our chapter 3 and 4 in the class when we talk about Social Security, Medicare taxes, federal withholding, as well as state withholding. Step 3, pay the employees, process the paychecks, issue the direct deposits, all of that stuff. Step 4, paying and filing the taxes. We withheld taxes in step 2. That's not our money to keep. We got to send it off to, as the business, we've got to send it off to the IRS or to the state or whatever agency we owe the money to. We've got to pay that. There are particular schedules for those payments, but then we also have to file reports with those different agencies, and there is a different schedule for filing the reports. So paying and filing the taxes. Step 5, maintaining and retaining those records. She went through a whole long list that they have on the IRS website of the types of records that need to be retained and what the requirements are for as far as time periods for retaining those records. And then I added step 6, which is our chapter 6, preparing the journal entries that will then be entered into the accounting system. So that would be our step 6 as payroll accountants. So I like this video because it really closely mirrors everything that we discuss in this class and everything that we go through. I know she went through a lot of detail on items. we're gonna go through all of that stuff. Everything that she talked about, we're gonna go through. Don't expect you to know it now, obviously, but it's a good overview of what we're gonna be, all the different chapters and everything we're gonna be going over in the class. So let's go back. I got 10 more minutes of your time. I'm gonna use those 10 minutes to talk about these two reports. So, I'm gonna erase. Is everybody done with this? Can I erase it? All right. So the first report that we want to, here, I need to make this bigger because it's too big. All right, so this one, the first one is the payroll register. The payroll register contains information for the entire pay period. So you can see up here, it says for the week ending January 19th, whatever year, it has information about every employee that was paid on this pay period. Okay, so it pertains, so info. So information on all employees that were paid on one particular pay date. So I'm going to go through, I made this a little bit too big here. I want to go through some detail about the information that's contained on this report. So, as I mentioned, so we know from this that this particular employer pays on a weekly basis because it's for the week ending. She talked about the different pay schedules. This is a weekly pay schedule. Each of the employees listed over here to the left, the number of hours that each employee worked, their rate of pay, gross pay. Now you'll see there's two different categories of columns here. We've got regular earnings, and we've got overtime earnings. So they're calculated separately. This first column here, we've got the hours, the regular hours that were worked, so that would be just hours under 40 hours, or 40 hours and less during the week, their hourly rate that they're paid, and then the total gross amount of their regular earnings. This is information about overtime earnings. Total earnings column would be their regular earnings plus their overtime, so the total gross amount of pay for this pay period for each employee. Over here to the right, we have our taxes that have been withheld. Now, this particular report doesn't have any other deductions. Like there's no benefit deductions listed on here, health insurance, dental insurance, 401k contributions, retirement contributions, that sort of thing. But this report, if they had those types of deductions, it would be included here. Okay, this is just kind of a simplified report for our purposes here. So all of the taxes are listed here. So this OASDI tax, that's Social Security. We're going to go through that, so don't get too caught up in the terminology there. But OASDI, HI is Medicare tax. HI stands for health insurance. Honestly, I'd never heard it referred to as HI tax until I started teaching this class. And I saw that the author referred to it. I just called it Medicare tax. So you'll see me refer to it or abbreviate it as MC a lot of times instead of HI, but just know that those are interchangeable. It's the same thing. So Medicare tax, which is calculated based on these total earnings, federal income tax, which and you will become familiar with how to do these calculations. You aren't right now, and that's fine. But just know that there are a lot of calculations that go behind figuring out what these numbers are. State income tax as well, and then we've got our net payment. So So the amount of the actual paycheck that the employee receives, which would be the total earnings minus the total amount of deductions and taxes that were withheld from their paycheck. So if we look here, we've got Carl Springs. So Carl worked 40 hours, he gets paid $10.75 an hour. If you multiply that out, that's $430. He didn't have any overtime during this particular pay period. So there's nothing in this column for Carl. Total earnings, $430. So we're just like I said, the total earnings would be regular plus overtime. Since overtime is 0, it's just the regular earnings. And then our taxes, which you're going to learn how to calculate these amounts.
Sorry, I gotta go.
So you're going to learn how to calculate these amounts, each of those, and then again, his net pay. So Carl got a deposit of $367.10. Now you see here, Sue did have some overtime. She worked a total of 42 hours. 40 hours were at the regular rate of pay. So the first 40 hours she worked, she's getting paid $10.50 an hour. She worked 2 additional hours though. She gets paid time and a half for those 2 hours, so she does have an amount in the overtime. So 2 hours, her overtime rate is $15.75, which is $10.50 times 1.5. Again, we're gonna do the calculations for that in chapter 2. Total earnings, so this is her regular earnings plus her overtime earnings for her total, and then the amount of withholding. Now, one thing I want to point out here, you notice that, so Carl's total earnings was $430, Sue was $451.50. Sue made more than Carl that particular week, but Carl had $15 of federal income tax withheld. Sue did not have any federal income tax withheld. That's because the amount of taxes that are withheld are specific to that employee. Whatever their situation is and however they filled out their tax forms, their W-4 forms when they were hired or when they had changes. So that's the reason, even though she made more, she doesn't have any federal income tax withheld because her personal income situation is different than Carl's. And then her net amount of pay there as well. Everything down here, the totals, would be all of the employees. Now you see there's a gap here between, this is line 47, that's line 5. So we actually have a bunch of employees listed here. They just haven't displayed them all. So total regular earnings, total overtime earnings, total of all earnings, and then total of the amounts that were withheld for taxes, and the total of the net paychecks listed there. That is the payroll register. I know I've got 2 minutes left. The payroll register. How to remember that is, it's got the word payroll in it. Payroll register has information about, I should put this payroll. Information about all employees on one payroll. So all of the information from that entire payroll is on the payroll register. The next report, and then we'll be done, is called the employee earnings record. The employee earnings record is information on individual employees. And it is cumulative. So it is kept on a continuous basis throughout the year. Now, each year each year we go back to 0, but you can see here what we've got is Cheryl. Cheryl is a salaried employee. If we look back at the, let me look back at that real quick. Well, I won't show you right now, but on the previous slide, Cheryl was the last employee listed. So this is information about Cheryl for each of the pays that she has been paid this year. So she is salaried, so she's not an hourly paid individual. She gets $990.38 every week, and there's her withholdings. So for each pay, we see how much she's been paid. Cumulative amount, so like week 2 is the total earnings of last week and the total earnings of this week. Week 3 is the total earnings So that cumulative amount is kept throughout the year. This will be used to prepare her end of year W-2 forms. Now, one thing I want to point out as well, she's salaried, but there are instances when salaried individuals are actually entitled to overtime pay. So you can be a salaried individual, but even though you're not being paid on an hourly basis, you're entitled to getting paid extra for time over 40. Now, our job as payroll professionals is to figure out, okay, she's salaried, she worked overtime, how much do we pay her? How much is that overtime on an hourly basis? So they've done the calculation here, 37.14, but we're gonna do that. We're gonna figure out what that hourly rate is for those salaried individuals. There are lots of different nuances like that, where it seems like it's clear cut, but then there's some little wrinkle that's thrown in, and we've gotta do some extra calculations. All right, so the thing to keep in mind for the employee earnings record, again, it's on an individual employee. So if it's got the word employee in it, it's about the employee, that one employee. If it's got the word payroll in it, it's about the entire payroll. Okay? All right, I know I did that fast. Have a great couple days.